Good morning, everyone. For this session, I'm going to discuss about recording of business transactions utilizing the same source, that is Baliada. So the recording of business transactions actually of chapter 3 of the basic financial accounting and reporting book of the two Baliadas would tackle three steps in the accounting process. So we have the recording, also known as journalizing, or recognition. So those three terms are very similar to each other. Make sure to jot them down. Also, after that is posting the journal entries to the general ledger. And then the third one is preparation of trial balance. So you can see them on the learning objectives that would serve as our guide so that we would be able to do the steps well. Now, in your observation, probably there is still a mention about analysis of transactions, like for number 5, also 4 and 6, rules of debits and credits. It is because we have to make sure that we are able to understand really the previous chapter, the rules of debit and credit, and the analysis of transactions so that we can do the step well, which is the first step of the accounting process, and that is to record the business transactions. So, to and now for the learning objectives, this will serve again as, or they will serve as our guides, so that at the end of the chapter, then we can do the following. So we can group them from 1 to 7. We're talking about the recording of business transactions. So let's go in detail. We can explain. Of course, prior to that, we can list in brief the sequential steps in the accounting cycle. So these steps should be followed. Otherwise, we would not be able to achieve our desired inputs. And because they are steps, so we have to follow them in order. Second is to identify the general journal as the book of original entry. So later on, you will see a sample general journal. And this is called the book of original entry because this is the very first time that we place entries or items to the books of accounts or accounting records of the business. Then we detail the standard contents of the general journal, what composes or comprises the general journal. Fourth is the steps in analyzing transactions that we have already tackled in the previous chapter. And what are these source documents and their roles? Fifth is the impact of transactions, whether they increase or decrease the accounting elements from assets down to expenses, as well as the specific accounts under each element. So remember, in the previous chapter, there are lists of account titles under each accounting element. So example, under assets, we have cash, accounts receivable, petty cash fund, inventory, supplies, and many more, including prepaid expenses. So we have to know those account titles because we will be using them in recording the business transactions. Sixth is to apply the rules of debits and credits, like when would assets increase and decrease. So assets have normal balances or increased sides of debits. Therefore, they would increase on the debit side and they would decrease on the credit side. And then we have to apply these rules in analyzing business transactions. Then the next one is to journalize transactions in proper form or format, so the debit and the credit. So these are the 7 learning objectives for the general journal. And then for the purposes of discussion, so we will focus for this part 1, for only the recording of business transactions or journalizing or recognition. Let's begin. So here is a case that actually discusses about a certain business that became profitable and became successful just because of prediction of what's going to happen. And then this is forecasting of what's going to happen in the future in terms of the weather, most especially with seasonal businesses wherein they would sell their products more depending on the weather forecast. So a certain business which is SWS got successful. Anyhow, transaction analysis is actually again discussed in the previous chapter, and this is composed of four basic steps. One is to identify the transactions from source documents. So whatever source documents there are, examples of such would be, let's say here, official receipts. The official receipts would be showing to us the amount that we have collected if we are on the part of the seller, or the amount that we have paid. If this is the traditional world, of course, normally we would be getting a copy of the invoice if we are the seller, and then the original normally, or the first page, would be given to the buyer or customer. So on the part of the customer, that would be a payment. On the part of the seller, collection. And that is the source document. From there, we're going to analyze as to what the transaction is. In fact, we have said already that it is collection. Then we have to indicate the accounts affected, whatever accounting elements they are, from assets down to expenses. So you can notice drawing is not here because that is under equity as discussed in the previous chapter. Number three, ascertain whether each account is increased or decreased by the transaction. So for example, we debit account receivable, that would increase it because it is an asset. Then what would be the debit? I've said already, for example, in the collection, that's going to be a debit to cash or cash in bank if that is really deposited to our bank account, and credit, for example, accounts receivable if this is collection of a customer's account. All right, so that is transaction analysis step one. This step one, though, is incorporated into the recording of business transactions if you have to visit other books. So regardless, that's going to result anyway to the same concepts or principles. This has to be done prior to the recording, or to the jotting down actually of the journal entries to the general journal. Next, source documents. In books or in school, we are given already the transactions in phrases or sentences or paragraphs. What we have to do is to analyze those sentences. However, if this is real life, we really have to understand what the document is all about, the contents, so that we will be able to identify what the transaction is. And that's how it goes. Here are some examples of the source documents. So we have sales invoices. For the sales example, if this is service concern though, so the rendering of services either in cash, and that's going to be the cash sales invoice. If on account, the charge sales invoice. The cash register tapes, of course, will be showing to us the details of whatever transactions that we have made for the day, most especially if we are using, for example, the POS, the point on sale of sales system, just like for convenience stores or grocery stores or malls. So after the day, there are copies of those receipts on the cash register tapes. And you just have to print that out so that the summary will be, of course, obtained or printed, and then we can see as to the details for the day in terms of collections. Official receipts, I've said already, bank deposit slips for the deposits to the bank statements, which would be monthly. For example, if we would like to know what transactions happen between the company and the bank, checks, if we paid through checks or checks coming from our customers for payments. So normally cash in bank. Purchase orders, no commitment yet because we're just making the order. Time cards for the basis of computing labor, like how many hours did the employee consume or actually render for the company. And the statements of account, for example, for our liabilities, for our utilities, and for example, if we sold products to our customers on account. So we issue statements of account. So these are just some of the source documents that we have to identify and describe transactions and events entering the accounting process. Mind us and you guys is that not all transactions again and events, as what I've said, are accountable. When can we say again that transactions are accountable? We have two items. First, if they affect the accounting elements. from assets down to expenses. And second is if they have two sides, if they compose actually two impacts, or let's just say sides. We have the debit and credit. So debit is value received and credit is value parted with. Next, accounting cycle. The accounting cycle will be showing to us the series, or let's just say the sequence of steps or procedures performed to accomplish the accounting process. And here are the steps in the accounting process. Steps 1 and 3, well, as well as 4, they are to be discussed here in this chapter. But then for the purpose of recording, so we can just deal with steps 1 and 2, wherein we identify the events to be recorded and transactions are recorded in the general journal. Now we can notice that steps 1 to 3 are done during the accounting period, but steps 4 to 9 at the end of the accounting period, while 10 is at the start of the next, reversing entries. Well, for steps 1 and 2, no question, it would be during. Step 3, though, rather, is that journal entries are posted to the ledger. This is done by some at the end of the accounting period to make sure or to ensure that the transactions are already done or have ended before they're actually posted to the ledger. But then some may be doing them like the posting during the accounting period, but then the actual getting of the balances or summaries to prepare the trial balance, the next step, will be done at the end of the accounting period. So that could also be done. Then another thing is that for some, anyway, it's going to be like at the end of the accounting period or the moment that all transactions have been recorded in the general journal, because otherwise we would be like putting certain entries of various dates wherein supposedly we should be recording and posting transactions and entries in chronological order. So in the order of the date of occurrence. So what happens first must be recorded first. What happens next should be recorded next. All right. And then another thing is that if we are using the computerized systems anyway, so whether we record the transaction first or later, depending on the dates, everything will be arranged. The system or the computer software will be arranging such for us. It's a matter of clicking the certain function. Like we want the general journal report or we want the general ledger. It will be downloaded and exported for us or for our usage. Anyway, what's the purpose of discussing the manual? Because we cannot appreciate the computerized if we do not know the manual then. Now take note, this is a cycle. So it ends, of course, it begins and ends. And then at the next or in the next accounting period, it will again begin step 1 and so on. So that's why it is a repetitive or iterative process. Next is the flow of information that we will be getting from the general journal. This is a sample journal entry. These are the effects of a transaction in terms of debits and credits, and they will be carried forward to the ledger, which is the grouping of the accounts. So remember, under each accounting element, we have the account titles. So these account titles then are, of course, the specific groups of accounts. And then we are going to place whatever accounts that are affected and the amounts. Example, office equipment. So that's the debit. We have to place that to debit of office equipment. Cash credit here will be placed credit, and accounts payable will be placed credit. And the process of doing this, the transferring of the amounts from the general journal to the ledger, of course, highlight appropriate accounts, is called posting. Next, for trial balance, after we get the balances of the accounts affected here by our transactions in a certain period, then we are going to list all ledger accounts in order with the respective debit or credit balances. So here are now the items in the trial balance from assets down to expenses. If you can recall, I mentioned specifically that we need to know the order because this is very helpful in the preparation of trial balance and as we go along the way. Right, so after that, let's have the first step, the journal. Journal is a chronological record of the entity's transactions. Chronological is from the word chronos, which means time. So this means that the transactions are to be arranged in accordance to the date of occurrence. Whatever happens first must be recorded first and so on. But then again, if we are using the computerized accounting information systems, whether we have recorded sometime later transactions first or the very first later on, it wouldn't matter because the system will do the arrangement for us. Then the journal is the book of original entry. By the way, for a business, we prepare the so-called records or accounting records, which are also known as books of accounts. By the way, there are so many terms being mentioned. Hopefully, you are taking them down or jotting them down because they may be used interchangeably in our discussions. So the accounting records or books of accounts could be the journal and the ledger. So the journal is the book of original entry because this is the first time that transactions are being recorded actually in the books of accounts of the company. The general ledger, on the other hand, is called the book of final entry because that is the time that we are going to summarize the impact or effects of transactions and the amounts. Then we are going to process them later on to the next steps. Although the next steps will be part also of the accounting records, but these are the first two accounting records, general journal and the general ledger. And of course, there are also other types of journals and ledgers that you will know in the future. General journal is the simplest journal format. So we can see here such. Anyway, these discussions will be discussed by me as we look into the example. So let's have it. We have the transaction here. We assume that Maria Concepcion Jennifer Perez Manalo established her own wedding consultancy with an initial investment of 250,000 in May 1. When we analyze a business transaction, we always think that it is the business that did the transaction. So if the owner invested to the business, therefore the business received the investment. Again, under accounting entity concept or business entity or separate entity concept, the owner and the business are two separate and distinct persons. So we have to debit cash, 250,000. We have to credit the capital account at 250,000. So this is how we journalize. So look first at the heading. The heading is composed of the date column. On the date column, we have to be writing the year and then the month and the day. If, for example, we now record the next transaction, we are going to leave a space so that one transaction wouldn't be mixed to the other. Then we do not repeat the month. Let's just say, for example, the next day is 2. So we write here, or that's the 2nd May, or May 2. So we write here 2, and then we continue with the recording. We do not repeat the month. Question: when do we repeat the month? We repeat the month if ever this is already the next page, because you also have to repeat the headings, by the way. So the headings should be there per page. I hope that is clear. Again, we repeat the heading per page. Then, going back, when can we repeat the month? We repeat that if this is the next page or if it is already another month, let's say June. However, normally for cleanliness purposes and so that we can present our records properly, normally if this is the next month, we go to the next page. Like it's just cheap anyway, or how much does that cost just to leave a page for the next month? But just in case, let's say we are really saving, so this is already the next month, we have to repeat the month June and then 1, for example. Otherwise, if we do not put the month, meaning that is still May. We will assume that is May, which is not the case. Otherwise, we will also be confused because how come we already ended May, let's say May 30, and then the next is 1, and that is still May, meaning we did not arrange the transactions in chronological order, which should not be the case. So I hope that is clear for the date. Next, for account titles and explanation, so we put here the debit and we put here the credit. Now you can notice that there is indentation from debit to credit. The point of that is for us not to mix the debit and the credit account titles. Otherwise, we'll just assume that everything is debit, which is not the case. Again, for every transaction, there's always a debit and a credit minimum. Then from the credit to the explanation, there is again a space or indentation. We call that the explanation, by the way. So the explanation normally is just the gist or just to summarize what the transaction is all about. Again, this transaction is about the initial investment of the owner or proprietor. So whatever it is, for as long as you are able to capture the said transaction. So example is, let's say this is initial investment. So initial investment of the owner, or let's say to record initial investment or to record initial investment of the owner. Take note, I attached the word to record because the suggestion really from other books is that the explanation should begin with the words to record. So to improve this one, kindly write to record. So hopefully this is emphasized. And you can notice that we always begin with capital letters. So to record initial investment of the owner. So again, any explanation will do for as long as it begins with the words to record and we attach the gist or the meaning or the essence really of the transaction. This is initial investment. If this is collection, so to record partial collection perhaps of the owner, or to record full collection of the customer's accounts, and so on, without the amounts. Next is PR, posting reference. PR or posting reference actually is the order of the account that is found on the chart of accounts. So you will know that later on. The list of account titles is called the chart of accounts. So you will notice there that, for example, cash had a code of, let's say, 100. So we are going to write here 100 and so on. For capital, let's say it's 310. So we write here 210. Then for the debit and credit columns, these are now the amounts for the transactions or the values. If you can notice, we always actually start writing the amounts from the last digit, meaning the last digit is 0. So we have to write first the 0, and then we always begin writing from the right to the left. So 0000052. Also the same here as the credit, and we have to align. Be careful for the alignment or with alignment. And then, so let's say there are decimals. So the decimals normally are being written on the last little column, the 2 decimals, but it's not shown here. It's exact anyway. That is just to be safe though. But if there are 2 decimal places or values at the end, so all we have to do is to place them there. Then for the writing again, it's from the right to the left to ensure that the accounts and the amounts later on are aligned with each other. We don't have to be perfect with the alignment, but at least we would be seeing that we are following the system or the procedure. So we have to keep it neat, nice, and clean, the 3 ends. Again, neat, nice, and clean. However, it cannot be avoided though that there would be erasures that will be committed in recording of business transactions. So how do we diagnose that? How do we treat that? Well, what we can do is that we have to simply put one line. We do not scratch, we do not put white ink or correction tape. No, no. All we have to do is to put one line and then we write the correction above it. So example, let's say we have written here accounts receivable. So all we have to do is to put one line. Then above that we write, let's say, Again, it's cash, right? Above accounts receivable. So we write cash as the correction. Or let's say we credited here accounts payable, but it should be Perez, Manalo, comma, capital. So we put one line and we write here Perez dash Manalo, comma, capital. So that's how we are going to put here the correction. So just a matter of one line. All right? So that's how we are going to journalize a transaction. This is an example of a general journal. Next, how do I identify a simple and compound entry? It is a simple journal entry when there is one debit and one credit. If ever it exceeds with one, meaning two or more debits, or two or more credits, or both two or more debits and two or more credits, then we call such compound journal entry. All right. Next, we have the journalizing of the transactions. So to journalize, we have to know that there are at least two accounts affected by each transaction, the equality of the two sides. So the sum of the debits must always be equal to the sum of the credits, and the equality is always maintained. First one is duality, second is equality. All right, here are some transactions. We can notice that we have attached and enclosed in parentheses A, which stands for assets, and OE for owner's equity. But then in actual journalizing of transactions, guys, we do not attach such. We follow this format. But if you are using paper, so we just have to imagine like this is the date, or we can put simply columns or lines. So you can make use of your rulers and place the lines there. That's going to be an easy thing. So for this one, we just have to omit if this is now the actual recording, and we really have to spell out debit and credit then. So DR is the shortened form of debit and CR is the shortened form of credit. So the first transaction here, May 1, is all about the initial investment. So very similar with our sample from here. So debit cash, credit pairs, Manalo, comma, capital, and explanation could be to record initial investment. Next, this is payment of rent in advance. So if it is payment of an expense in advance, it's going to be having the word prepaid and we attach the expense, which is rent. So prepaid rent, 8,000, credit cash, 8,000. An explanation is to record payment of, let's just say, office rent for 2 months in advance. Or you can simply write to record payment of rent in advance. Next, this is the borrowing of money from Metro Bank. So we actually received, the business received cash, 210,000, and then this is with the bank. So there is really a note that is to be executed. That's why it is notes payable 210,000. And the explanation could be to record borrowing of money from the bank with a promissory note. Next, May 2, this is a non-accountable transaction in the sense that this is just the hiring of an office assistant and account executive. However, this can be taken down into our records. So that's why this is not to be recorded in a form of journal entry, and it will be just a memo entry or a paragraph or sentence form that the company hired an office assistant and account executive with the details. Next, for May 4, this is going to be the acquisition of service vehicle. Therefore, we have to debit whatever account title that is appropriate. Under IAS 1, presentation of financial statements, we can make account titles for the business provided that it would capture the essence of the account or transaction. So service vehicle is fine. For some books, they might be using equipment or delivery equipment or office equipment depending upon the usage of that vehicle. So we have written here 420,000 and credit cash. Then this one is for payment of insurance in advance. So we are going to debit prepaid insurance. This is good for 1 year comprehensive insurance coverage on the service vehicle here from May 4. Then credit cash. And then, by the way, explanation. So here to record purchase, you can also use the word acquisition of service vehicle. This one is to record payment of insurance in advance. Then this one is acquisition of office equipment on account. So we debit, of course, the office equipment that is received, credit the payment of cash 15,000 and the balance accounts payable 45,000. Explanation, to record purchase of office equipment on cash or in cash and on account. Or we can simply write to record acquisition or purchase of office equipment. This is very tricky because there are two items on the credit side. We just have to be careful with the alignment though. And then, which means that all debits should be aligned and all credits should be aligned. And the order should be all debits, all credits, then explanation. So it's not allowed to alternate like debit, then credit, then debit. No. It should be all debits, all credits, then explanation. Next, supplies purchased on account. So debit supplies and then credit accounts payable. No mention that this is with a promissory note, therefore it is assumed to be using the verbal approach. So supplies and accounts payable to be recorded at 18,000. Explanation, to record purchase of supplies on credit. You can also make use of on account or in terms. So some books will be using in terms. Next would be the partial payment of the amount owed from San Jose Merchandising. So debit accounts payable 10,000, credit cash 10,000, and we are going to write here to record partial payment of suppliers account. So for example, because we are on the part of the customer here and we, let's say, purchased goods coming from our supplier. So record partial payment of our account, let's say, or suppliers accounts. Then for May 10, this is for the revenues earned. For this transaction, the business received money or fees, 8,800 per couple, and there are three couples actually. Then this is for the services rendered. So in that case, because services are rendered, debit cash, credit consulting revenues for 8,800 times 3, this is the amount. Next, so when we pay salaries now to our hired employees, then we are going to record the transaction. So we have to debit salaries expense at 6,600, and then we are going to credit cash 6,600. If you can notice on the transaction, the entity pays salaries every 2 Saturdays, so meaning the salaries are to be paid twice a month. So we expect that close to the end of the month, there will be another payment of salaries. Next, for unearned revenues collected. So in this particular case, what is the possibility here? It's possible that we received the money in advance, but we did not render the services yet. So what we can do then is that we are going to credit the said collection in a form of a liability account, which is an unearned revenue. So debit cash, that is for the amount received, and credit and earned referral revenue. So we have here the advance fees received for the three clients referred to. So debit cash 10,000 and credit and earned referral revenues for 10,000. Next, revenues earned on account. So this is being able to render the services. However, the customer did not pay in cash. So they just provided the oral or verbal promises to pay. So in that case, we are going to debit accounts receivable, 36,000, that's 12,000 times three couples, and then credit consulting revenues, 36,000. The moment that services are actually rendered, that's automatic to be credit to, revenues account. In this case, consulting revenues account. So that's going to be a given. And the challenge now is to pair it with the appropriate account. So example, there's no mention that it is like done on account. So we are going to debit it simply to cash account. However, in this situation, again, this is on account because there is the word billed. So The company rendered their services and then it billed for the fees to the customers or for the couples 12,000 each. And then no payment was made yet based on the discussions. Therefore, that's going to be on account. Then no mention of promissory note, so not notes receivable. Next, the withdrawal of cash by owner, the use of assets. In this case, we assume again that this is on the part of the business. So it is the business that received the withdrawal coming from the owner. So in that case, we are going to debit the withdrawal account. So Perez dash Manalo withdrawals 14,000, and we are going to credit the cash account at 14,000 pesos. So if the owner withdraw an asset to the business, really the owner has been getting back a portion of his investment. So that's why there is a deduction to the capital account of the business in the form of the withdrawal. And another analysis would be the business received the withdrawal of the owner. So that's why we are going to debit the withdrawal. You can just notice how the withdrawal is being recorded. That is the last name of the owner. Actually, I mentioned this one when we discussed the previous chapter. It can also be that we are going to write here the first letter of the first name of the owner or proprietor, then dot. Let's say the name of the owner is or proprietor is, let's check, that is Maria Concepcion Jennifer. Okay, so three long first names. So Maria Concepcion Jennifer. So quite a long first name, but then we just have to make use of M, the first letter of the three-word name or three-word first name. So M dot Perez dash Manalo, comma withdrawals. That's also okay. Or we write the entire first name, which is quite long, which is not advisable anyhow. So Maria Concepcion Jennifer Perez dash Manalo, comma withdrawals. So this is okay for as long as the last name is there. Perez dash Manalo, comma withdrawals, credit cash. For the capital account, so well, same format, the last name, comma capital. For withdrawals, by the way, we can also make use of the word, let's say, drawing. That's also another word that is allowed. And another one is personal. Again, discussed in the previous chapter. So it can be withdrawals or drawing or personal. Next, as what I've said a while ago, salaries have to be paid close to month end, which is May 27. So same entry will do. By the way, explanations. I think we have skipped the explanations. So here, to record services rendered or to record consulting services rendered, right? Here to record payment of salaries. Here to record advance fees for referrals or to record unearned referral revenues. That's going to be okay. Here to record consulting services rendered on account. We have to identify this separate from the previous rendering of consulting services, which is not on account but in cash basis. Here, to record withdrawals made by the owner or proprietor. Here, to record payment of salaries. Here, this is now another transaction. This is for the expenses. So we are going to record here for the telephone bill, 1,400, which is actually on account because we are not going to pay it exactly as the time that we have received the bill. For example, if we have received the bill May 30, we do not actually pay it exactly at May 30. Therefore, that's going to be a credit to utilities payable at 1,400. So we have to write here to record payment of utilities, or we can write here to record payment of telephone bill if the credit is cash. But because this is utilities payable, so we are going to write here to record utilities payable, or to record receipt of the telephone bill. So we can also do that here. Then for this one, this is partial collection of the accounts receivable from the consulting services rendered prior. So we are going to debit cash at 24,000 and credit accounts receivable at 24,000. We can write the explanation here to record partial collection of customers' accounts. So customer apostrophe S, meaning account of the customer. This one is the settlement of the electricity bill. A while ago, that was telephone bill, which is not paid exactly at May 30. Therefore, that's still a liability, utilities payable. For this one, it's really paid in cash, therefore credit cash. And we can write here to record payment of utilities expense. Right? So hopefully you learned something for the recording of business transactions, especially for journalizing. And then the next steps will be discussed in the next part or parts of this particular chapter. Thank you very much for listening and have a good day and God bless.